Let's try it again. Nightly strategy podcast for January 26th, 2022. So we had a fractional gap up here, gave us a 1, 2, 3 entry. It immediately reversed and ground down for the most of the rest of the day. The one positive note was that it did make a higher low. So we're starting to see a little bit of support being established. Still choppy, not really supporting swing trading yet. Intraday trading is still indicated. The Hull 3 period still sloping down. The extension of the 30 is still down. PSAR is grinding down. We closed at Z minus 2.5. And still deep in the winter on the daily MACD. Let's look at the let's look at the sectors. S&P was down a fraction today at minus a quarter. The Qs are down 0.16. Diamonds down 0.44. Treasuries off 1.2. They're hovering right above 140, which is a key price level. Emerging markets 1.25. Russell 1.5. Let's look at the sectors that worked. Energy was just off a fraction at minus 0.17. Agriculture 0.15. The FANGs, Bitcoin, lithium, the Bitcoin futures, blended commodities, finance, tech in the green up to 0.6. Oil, Brazil, Ethereum, and the VIX up to 2%. Tesla had a nice recovery of 2%. Individual companies that scored well today. The blended large cap crypto 3.4, Microsoft 2.8, TX the steel company 2.6, Tesla 2%, John Deere and Devon Energy in the industrial and energy sectors, and Apple slightly better. So this was the resumption of tech today. Underperforming sectors next. Moonshots and lumber down 0.3 and 0.34. Mexico, consumer discretionary blockchain down 0.5. Consumer staples down 0.76. So this may actually start seeing the shift back to the growth on as we're getting rising lows. I think that seems significant. Simon Property Group minus 0.8. The other lumber 0.86. Materials 1%. Oil exploration and marijuana 1.3. Clean energy continuing just to get slaughtered 1.5. Wheat and precious metals 1.8. S&P biotech, both of the ARCs down 2 and 2.5. Individual companies that underperformed. Robinhood off 5%. Coinbase and Squarespace also in the financial disruptors 3.7. Cliff 3.5. US Steel 1.95. So the metals are setting up for a return as a value play. So I'll be watching them intraday for their turning points. Let's go to the daily report. All right, we've now moved into bearish volatile. So the short side intraday trading is really favored. Everything in the low half of neutral, even the 270 has now moved into high end of neutral at 60. Price relative to the 200 is now, we're now into the bearish territory here at 2%. Strong bearish trend down. That should let you know what direction to be trading in. Risk Z is risk off and abnormally large volatility. On the positive note, mid caps and emerging markets are both postured for index channeling, so that is of interest. That risk Z is really bottomed out here and reaching -2 sigma, so we'll be watching for that recovery move at some point. Meanwhile, that the intraday downward moves are to be emphasized. In the Dow, there's a ton of auto framers setting up well. These 5DD should be framed for 5DD failures in a bear market. So that's Verizon, Walgreen, Coke, Boeing, and even Apple on the downside. The ETFs also, there's a ton on the auto framer setting up. And we want to be looking for weakness in that clean energy. Well, we should be killing that on the downside. The bottom just keeps falling out of that. We'll just keep watching it going down. At some point, we may even trade it to the downside. Metals and mining, big losses today. So that's another possible candidate for short side trading. Tons to choose from in the auto framer here. The large recent daily ranges means nothing is being squeezed. Being dominated in the four seasons by all the winters. So the ones that are in the worst winter sell-offs would like Amazon, the S&P and tech are all candidates for short side trading as well intraday. When they're so collapsing dragons should be the primary pattern that you're trading. Only a couple things looking good on the 2-day in here. This Johnson & Johnson, AXP, and Devon. And then the energy sector still looking good. Brazil remains interesting. I still think longer term, we got to be looking at 430 as a crucial support level. And the 430 breaks to the downside. We should be on the short side of that trade immediately. The slope of the 30 is now the worst that it's been in the last 180 days. And you can see by the percent stretch just how bad this is. That's the default bias, just to the downside. Here's that 430 price level. And again, if this breaks, the next one is 410 or 415. All right, let's take a look at some of the trades today. Here's just a couple quick flashcards as reminders of the turning point that we're looking for is when you see a long string of PSARs on the downside that gives you a harsh winter on the MACD, that's what constitutes an SSC. A simple PSAR flip inside the middle of the river is not a signal. You need a harsh winter, then this turning point, this flip now becomes your risk box. As you get long at the PSAR with a stop at the where the PSAR will flip. Again, requires a harsh winter to set up the SSC. Your Kata 2 then is looking at that turning point after the harsh winter, makes a move, pulls back, makes a higher low in the RL10, crosses the dragon for the RLXD entry, and then using the low of the RL10 as your risk box, and then your target is back towards some target like the Bollinger Band mean, previous high, VWAP, RL270, something like that. So that's what you're looking for in your Kata 2. When you've got a successful SSC and then it peaks, crosses the baby dragon, crosses back through the dragon, this is where you're going to look for a turning point that is either going to continue to fail by turning into the winter and then proceeding down to a collapsing dragon. And this is what we would call that supported winter crossing when it fails to recover. If it's going to work and a Kata 2, it's going to recross that dragon very quickly and give you a supported fall crossing. The briefer, the shorter that move down and the sooner it starts back up and recrosses the dragon is what you want. But if it fails to do that, then when this turns to winter, if you get short inside this area, what you're doing is front running the collapsing dragon, which is the violation of that original PSAR flip back here. And again, this collapsing dragon would be our favorite pattern. When you have that harsh winter and the RL10 reverses and turns to spring and then cross the dragon, that PSAR entry, when it takes out that PSAR, and your stop is at the PSAR flip, and that's your risk box. Normally, when this is going to work, you're going to get between 2 and 3 of these initial risks, and you're looking to make your move from the initial risk to no lose plus dinner for 2. I like to wait in the way for the PSAR dots to get past my entry. So I keep that initial stop in until it gets past my entry. Then I move it up to the no lose plus dinner for 2. What's that look like? It looks like this. So I have a harsh winter. I have the RL10 reversal, PSAR flip. That green line is my entry. I keep my stop in place until I get the PSAR 1, 2, 3 dots above my entry. Then I move my stop to that 4th dot. until it picks up the Bollinger Band mean. And then that's my managerial exit. If I have a really good run like this, I may end up taking half the position at the PSAR and half the position at the Bollinger Band mean. Same thing on this one. There's a harsh winter. There's the PSAR flip, the crossing of the dragon, and the entry at the PSAR dot. I keep my stop here until I get 1, 2, 3 dots above my entry. Then I move my stop to the Bollinger Band mean and take a managerial exit here or a sniper exit here. That's the Uwe exit. Works the other direction too. This is actually the crossing of the dragon and the PSAR flip. So I keep my stop here until I get 1, 2, 3 dots past my entry. Then I move my stop to here, and then just and then take the sniper exit there. So that's the Uwe exit. One of the exit strategies. All right, this looks like Joe on the S&P. There's our gap up. He waits for it to cross. We might have taken this entry here. He decides to get a hybrid frog box move off of the VWAP with an entry, takes the RLXD. Stop, and he reverses as it crosses the VWAP with the same standard risk box. Gets almost 2R in hand, takes the PSAR flip. Notice that with that winter, if you then just take that, you've got this trade available. This is approaching the Fed. Good job staying out of the chop. Fed makes an announcement. It fakes 1, goes 2. He waits for it to break basically below the Z3. Takes a scratch. Waits for a decisive move to the downside. Takes a 1, 2, 3 exit for 6. Pretty nice play. Not in a hurry to trade. He's got 3 sets of 50 trade blocks for us to review. So this is trades 1 through 50. There's a couple things that I look for. So the first thing I look for is that no trades worse than 1R. Let me zoom this up so you can see. So again, trades 1 through 50. No trades worse than 1R. He has 14 winners versus 23 losers. So that's about 2 to 1. But then his payoff is 3.5 versus 1. So that actually is giving him that positive expectancy. And you can see the importance of tight risk management, no losses greater than 1. His expectancy is coming in right around 0.28. The a bit choppy inside here, but he's also open to the possibility of large wins. So that's what we'd like to see. So pretty good for the first 50 trades, with a total of 15R net on the first 50 trades. Trades 51 to 100. Benefits from a really good trade set in here where he makes a fat right tail of 17 on one of them. What I'm looking for, though, is the no trades worse than -1. So a very tightly constrained histogram. That's good. 26 wins, 20 losses, 4 scratches. So his win rate is 5 to 4, and his payoff is 2.4, is a little over about 2.2 to 1. That's really good. Expectancy of 0.61, system quality number improving. Again, notice very tight discipline on the loss side. And there's the benefit from that one large trade. But what we like to see is this rising equity lows, giving it a smoother equity curve, and then the occasional big winner. So that's really good. His last set of 50 trades here. So this is trades 101 to 150. Again, the first thing I look for is no trades worse than -1. Best trade 5.3. That's great. Win rate of 21 to 14. So that is 3 to 2 on the win rate. And then the payoff is 2 to 1. So when you do that multiplication, his winning is 6 and his loss is 2. And that gives him an expectancy of almost 0.5. And you can see the system quality number improving. And again, very disciplined on measuring and controlling risk. And then wins greater than 1 and 2. There's plenty of those that are getting paid. So you can see each little group of 50 trades, his equity curve was choppy, then started to get smoother, and now is really smoothing. And this is what production looks like. This last set coincides with the partner trading with very strict rule sets, mastering 1 or 2 patterns on 1 or 2 symbols with accountability and clear markups and not over trading. That sounds like a pretty good recipe to me. All right, so this is, let's see, Nigel with the DAX. On the 1 minute. Here's the opening from a Z3 pinch. Takes the entry with a tight wrist box for 3. Now, when this does not get through the dragon and does not get down to the PSAR, yeah. So the exit would have been the PSAR dot. So this move would have been this one. That's probably +3. Good scratch. This reentry might have been here. You know, you get the PSAR flip, and now you have Kata 2. I'd have been tempted here. I'd have been tempted, to be honest, on the stop and revert. Failure to fail means maybe some of this. I don't mind that exit. I'd like to see this re-entry here. You get this is a super pinch because you have an abnormally tight pinch. You have the 270, the 90, the 30, and the 10 all pinched in here. And now what you see is a fake one. I'd have been short here, and would have, when it comes back inside and hits the dragon, scratched and gone long. And so this is a great entry, great exit. I would take that short instantly too. Good cover, and now he stays out of the chop. This one is also like a Z3 pinch, fake one, go two, and probably would have paid off. So 2.8, pretty good. This might have been 6 if we'd have gotten that 3 and maybe a little bit more of this, but that's pretty good work there on the DAX. And I like having the, until you've internalized what the MACD readings are, having the MACD seasons here shows you what a harsh winter looks like. When it goes below the 0 line and is out of this red river, this reversal to the spring now makes this the entry that you want. This one also. It wasn't a deep winter, but it got out of the red river. That's what counts. For a harsh winter, there's the trade. This one also was tradable. It's below that red river. This one also tradable, as that winter move is below the red river. Tradable. Here's Mark with 15 today. Yeah, this is not exactly what I was saying on the doubled initial position size. What I meant was before, you were like on the short side, you would have that as a risk box. You would get short, and then instantly or soon after put a second position on, then it would reverse, and then you were getting out here. Then the loss on the second position was negating the first position, and that was happening so reliably. I just said, stop taking the second entry. Take the dollars that you're risking and just double the number of shares that you're buying here, because your first entry is showing excellent success rate and payoff. The delay and waiting for the second position, then taking a loss on a double size, is what was grinding you down. So I said, trade with twice the position size, not increasing the risk box by 2. Keep the same risk box that you had before. Just trade the double number of shares and don't take the second position. That's what I meant. But whatever you're doing for 15 is pretty good. Here is a winter, spring, summer. So this was possible here as it breaks out of the river. This is still pretty good. That's like a Z3 pinch breakout from the previous pinch. Got paid a little bit. PSAR flip. And looks like it reversed to here for a fractional loss. Then a re-entry to the short side. Good. This is what I'm afraid that where you'd have been in the past, you'd have been taking the second entry here and then losing on the second position and then really undercutting the value of that gain. This is a great stop and reverse. So it just seems to me this is a lot cleaner with just one signal. By cutting your activity in half, you're making some really nice returns. Now this one gets paid nicely. I still like this one as a COTA 2. And that paid off a little bit. You stayed out of the chop pretty well. This is a fake one go to, and so this paid off a little bit. I like this one. It just reversed against you. This one paid off. At the PSAR flip, I'd like to have seen this, but this was already into the Fed. So that's happened a little faster than normal. So that's still a pretty good entry. I like getting paid. I'd love the re-entry. I love the second entry because now that thing was about 4R in hand. And now you have a nice 1-2 exit. That's about as nice as you get right there. So I think, I said, don't change. I said, only take the first signal and then you also widened the risk box. I think that's working. Now you're not as, you don't have as much activity and you're having better results. So I would stay with that. I like the idea of if you got 3R in hand plus momentum. What's good about this second entry is that there was an attempt at a reversal and it didn't. And so that becomes like a collapsing dragon, and you had 3R in hand, and you're waiting for that signal for the second position. So I think you're onto something there. Keep it up. This is Tom and Joe trading their mutual lessons or mutual rules. So they're on the 10-minute on TNA. 0.3 pulls back, gets the RLXD for 0.1 fractional loss. They stay out of the chop. This was the fake one. That is the go-to. So they're not shorting TNA. What they're doing is they're playing the inverse, which is TZA, and they'll get all of that gain. And today was 13R for those guys on 10-minute charts. So nice work. And we'll see that on the next one, I think. Yeah, here it is. So here's the TZA reversal. This way they can trade this in a retirement account because they're not going short. Technically, they're going along the inverse. So here was a 1R loss, a fractional loss, and then the re-entry, which gets paid a second position. Then he's managing the stop for the trailing 1-bar low, gets the exit, then another re-entry, and that's 15 off of that move. Pretty nice work, and no overnight risk. You got to be prepared for that kind of movement on a Fed day. I mean, that's the least surprising kind of a move. Devon Energy here. Fractional gains. Let's see what we got. So perfect PSAR flip, waiting for the Z1 breakout or frog box move off the low. Great exit as it's coming through the dragon. Now, when you have the high and a lower high, this breakdown across the VWAP and the Bollinger Band mean is decisive. We should be short here and not here. And then this would be the correct exit. So instead of losing 0.6, we probably would have made 3 on that one. This is a good stop and reverse and great exit. I like this. I like this short here because it's rolling over and failing across the Bollinger Band mean. I'll take that short every time. On the 1, 2, 3 exit or the PSAR, this has to be a stop and reverse. You'll get paid here. You stayed out of it, but I'd like to see you actually take that trade. And then higher low, this might have been a PSAR flipped long. And yeah, the correct entry would have been in here at like 52.84 instead of up here at 53.25. And then instead of a minus 0.4, that'd have been a plus 0.4. So there may have been plus 2 to 3 on this one today. With a little tighter work in here. Here's Ben on doing some chain trading. Okay, so this is the triple Qs on a 3-minute bar. Gap up and selling off. I like that. I like the tight risk control through here. This instead of here, that stop and reverse here is probably where it needed to be. That would have paid off better. He's looking at, he scores what 9 or 10, but was probably 20 was available if he's ready for that kind of a move. Yeah, when this is your kata 2, so that gap is in our favor. So I just go back to the previous belly of the dragon, gap or not, and then here's the next higher gap, and then that makes this a great kata 2, great reentry. I like the short effort. I like the stop and reverse. And you got paid pretty nicely inside this first bit of volatility. So you got to be ready for that volatility. And then this one covers and gets paid. But then when the VWAP gets crossed, that's where the entry is. Then on the Z3 pinch breakdown, there's an entry. When this cluster fails to get through the dragon, there's another entry in here. So there's at least 3 points where we might have gotten short, and then you'd be exiting down here somewhere around the PSAR flip. So that's where the extra 10 comes from. But pretty good work all the way through there. NVIDIA, less bringing in about an R. Here's our gap up, fails to fail, starts to resume. I like that wrist box. He's using the PSAR. Then he locks in no lose plus dinner for 2. He sees this thing starting to crest. So he goes to a 2-bar low, takes that, perfectly played. Then he gets the owl entry as the dragon and the 30 roll over. Here's the owl short and the PSAR. As nice as you want. Perfect. He stays out of the chop when the Bollinger Bands are pinching. He gets the Bollinger Bands moved to a squeeze, and then there's a Z3 breakout. He's using the PSAR ratchet to no lose plus dinner for 2 sniper. Perfect. I like that one. That's worth that failure to fail. I might have tried to stop and reverse, but again, you're getting pretty close to the FOMC. But again, I think you got to take a look at the Z3 box. And when you see the breakdowns, I might have tried to go long and then stopped and reversed. And I certainly want to be short when it comes out of this chop, out of those Z3 pinches. That's where I got to be short. And then I'll get all of this. So again, it's these pinches. And when this thing crosses the VWAP, I might have even tried right there too. With a stop at the PSAR, you'd have been okay. Either one of those entries short would have given you that whole move. Oh, okay. I see okay. This was a practice sessions. Okay. I was thinking, why were you only 0.9? And I see it was the start of the day. Still, that's good stuff. Looking for the total results of the day here. I can't see them. Okay, so there's 0.2 minus 0.5, 1.4, 1.2, 1.6 twice, 0.6, 1.5, 0.1, and 0.15. So that looks like 3.7, 5, 6.2, 7.6, 7.8 minus. So this looks like about a 7.5 day. Here's a Kata. This little Kata 2 is a little slow, but it still pays off a little bit. Stays out of the chop. Yeah, that's where this thing is rolling over. I like this short at the VWAP collapse. Yes, that's fine. I would rather see this one now that this whole thing is, so you're getting lower highs and it's crossing down below the Z3. I'd like to see you enter here, but that's still worthwhile. That's a good cover. And then this collapsing dragon is nice. Got paid. Good stop and reverse. Perfect. Perfect. This was a good shot right after the Fed. The stop and reverse was better. And then this one, the re-entry was outstanding. This is just a money management stop. So I think what you got to look at on this one is when you have that much in a windfall gain, that you just have some kind of trailing dollar stop that'll catch this rebound sooner. But still, you preserved a lot of that. You got the re-entry. So the same thing happened on this one. I think on those two trailing stops with a dollar value, you'd probably be in pretty good shape. And then this one breaks even. So I think you were around 7. You might have gotten another +3 if you're using a trailing stop that'll help protect you against that whipsaw volatility. But that's pretty good work. All right. I want to show the reason why the harsh winter matters. Oops. This entire move here is less than a hybrid frog box. This is all trading inside of the Crocodile River. And so if you go to, if here, this is my opening here, and this is a 20-cent hybrid frog box in either direction. I don't even get the first move out of the hybrid frog box until just before the Fed announcement. And so really, that's what trading inside Crocodile River looks like. It's good practice, but you have to have, for the SSC, which starts everything, you've got to see harsh winters and then clear reversals, so that you have to have that first harsh winter move to let you know that this thing is in play. And then it's the rebound from that, the response, that gives you the SSC. But then if you don't get the SSC after that first harsh winter, when that SSC fails, that's where you get the collapsing dragon. So this is an example of just how tightly compressed things will be on a Fed day. So let's wait to see the harsh winter before we start chasing. All right. Yeah, and so that's not surprising. That's what the grind looks like. I mean, these risk boxes, this little 1R loss, that's a 5-cent risk box. That's just noise. That's not a directional move. So take a look at the size of the frog box. Have that on your chart at the start of the day. And then wait to see harsh winters. All right, that's everything we got for today. Let's get this published and posted. I'm going to be putting I was hunting for some flashcards, and there was some nice work some guys had done, and some students in the foundations course that put some of this stuff together. I thought was pretty nicely done. So I'm going to upload these into Campfire for you. This one is just kind of a quick cheat sheet on some standard patterns. I guess cleaning up my drawings nicely. So the 1, 2, 3 exit was when you had that kind of peak move and it made a new swing high, and then you got a lower high. As soon as this thing closes with a lower high, that makes this bar 1, bar 2, then bar 3 is live. And when it takes out the low of bar 2, that makes this the 1, 2, 3 exit on the after like an SSC, and you want to capture most of it. That's what that 1, 2, 3 exit looks like, and the exit level is right there. Bar 3 is live. By the same token, if you are using a 1, 2, 3 entry on the other side, you would see the swing low, that bottom tail. Then it closed here. It opened here or opened here, doesn't matter. When it closes and it made a higher low, that makes this bar 2, that makes this bar 1. Then when bar 3 is live and it takes out the high of bar 2, that's your entry. That's a 1, 2, 3 entry. Here's his rendition of the PSAR flip. The PSAR is flipping down and then it flips up. And so a typical risk box would be from PSAR dot to PSAR dot. Here's your P1. Remember, this has to be outside of the river. So RLCO crossovers inside the river don't count. This has to occur outside of that river. That makes this a P1. That makes it an unambiguous move. Here's the R after the unambiguous move. This is that RLXD. And remember, what I like to see is when that PSAR comes down, when the RL10 crosses the dragon is the RLXD, or if price had crossed the PSAR flip, I'll take that as an entry too. The emerging dragon is when you had the dragon and then the high tick of the dragon and it rolls over and then reverses. If you buy it when it breaks out above the hump of the dragon, that would be an emerging dragon. We would also take that as an RL10 hump too. And then anything in this little space is the pocket. And what you're doing there is any entry, like if price came down here and then crossed, and then you decided to buy in here or in here or in here, any entry between that northern skin of the dragon after it turned and the emerging dragon, we just call that generically a pocket entry, and you are front running the breakout above that previous peak. The morning hook idea is based off of early morning quick sell-offs, and that's the working low of the day in the RL10. So if you just take the bottom of the RL10 and then you stretch a frog box off the bottom of the RL10, that would be a modified frog entry because you're buying it. You would like to buy here, not later than here, because it's moved a full frog box off the bottom. So what we like to do using a form of hybrid rule is we take that whole frog box and just drop it down to here. And we say, now the move off the low, what I'll do is I will enter at 0.7 a hybrid frog off the bottom. But for position sizing, I would take the entire frog box. And I might, if I was using the full frog box as a stop versus the swing low. See, this would be a collapsing dragon. So I'm not going to stop and reverse after a full frog box. I'll use that for position sizing at times. I will still execute the collapsing dragon off the low of the day. But now what I'm doing is I'm getting long after only a 0.47. So maybe I saw a 1, 2, 3 like this, but maybe for some reason I didn't take it or I couldn't take it. This frog box levels are ways to get in if you don't recognize a pattern or you can't pull the trigger or it happens too fast or whatever. I like to have those those frog box levels produced. Okay. All right. This one, the Z3 excursion, this is like the Z ladder. So what I have is, let's imagine now that in the middle of the river, I've got that Bollinger Band mean, which I like to do as the red line. And then I'm going to have my river is plus or minus 1. So that's the solid river in here, right? And then the floodplain is that dashed blue line. And then the outside red line is that Z3. The Z3 would be way up there, right? So what I like to see, I'm going to draw this in purple, is when that RL10 crosses the Bollinger Band mean, leaves the river, leaves the floodplain. Maybe it goes beyond the Z3 line and then reverses. This is what I like to do is, if it gets beyond Z3, I'd like to enter at Z2 and then use a full Bollinger Band box as my risk. That's a Z ladder trade. And then my idea is that the play back to the edge of the river is 1 scoop, Bollinger Band mean is 2, far side of the river is 3, far side floodplain is 4 against that risk of 1. That's a potential of 4. So that is a Z3 excursion kind of a trade. And what triggers this is the fact that it moved to the floodplain or beyond. That gives me the equivalent of a harsh winter, is that extreme abnormal move that now has started to reverse. This one, it typically in the owl, what will happen is you get the RLXD. So you had the bottom of the RL10, you got a P1, you got the RLXD. So that's 1, 2, and 3 that creates the SSC. To make it an owl, the fourth criteria is the dragon curls up. So now the slope of the dragon, which was flat and curls up, that might be where your entry on the dragon curls up is. And then you want to see, there's your P1. Now the RL30 rolls up, and that's what gives you the owl. We've seen one of these bottoming tails already, where you had some kind of selling pressure and then a very large range candle that opened, sold off, and then moved all the way back up to the top. And right now we still have one of those in the market around 430 in SPY. You'll see a bottoming tail. What I was talking about on the pure money management stop, I think on the last one, this might have been Mike or Les, that at some point you get that extreme move to the downside, and maybe because you're short, you have something like I'm plus $400 of open gain, and you might just say, you know what, I'm not going to give back more than 3. I'm going to give back not more than 100. And so you just have a money management stop that puts a cap on this one. You say, I'll let it retrace that much, but I'm going to keep 300 of the 400. All right. Or you might just say, I'm going to keep a fraction or a percentage. So you, by inspection, you say, I have that much. I'm willing to give back 1/3 or 1/2 or 2/3, something like that. So you can just, by visual inspection and psychological satisfaction, you can make some of those choices. Okay. So I'm going to post that flashcard in Campfire and on Patreon for you guys. I think it does a nice job of cleaning up some of my sketches. Okay. All right. That's everything I got for us today. We will be ready for it tomorrow. Going to be another volatile day tomorrow. And then Friday will even more so. So these are wonderful days for intraday trading and learning to deal with the volatility. Remember, you want to see the harsh winters, extreme moves to bring you into the market. There's two abnormalities that'll bring you into the market. abnormal super pinch, right? So the two things would be either, from some little sideways move, a harsh winter in one direction, then the SSC or the collapsing dragon. So you need to see that harsh winter into a critical state. Without that, it's just going to be choppy. So the abnormal move is what draws you into the frame to set up. The second thing is if the Bollinger Band means close so much that this thing chops around and the super pinch or the Z3 pinch happens where you have a really tight frog box and then you're waiting for the breakout of that abnormally pinched price action. So it's the abnormal conditions that create the critical state. So the harsh winter then into the SSC or collapsing dragon, or the Z3 pinch, or the super pinch if you get all the regression lines in there as well. All right, that's everything I got for you today.